commodity currency is really not getting a bid at the moment.
And that's it, isn't it? I think that weakness in iron ore is still flowing through to those larger miners. We are still seeing BHP, Rio under pressure. Fortescue also off about $4. What are we? $4.70 at the moment. Let's bring in Lawrence Parker-Brown, who joins us live from Cosec Gadari Securities in our Sydney CBD studio. Lawrence, is always great to see you there. What are you making of the session? Because we were just talking about those fairly positive numbers from China, but unfortunately not seeing that sort of flowing through to the resources space.
As you say, it's going to take some encouraging data throughout this week to really drive our market on. We've sort of reached a point where there's a little bit, we're waiting for that steer. Obviously, we'll get our retail sales tomorrow, which will be quite intriguing to see. And then obviously the big excitement will be at the end of the week, flowing through tomorrow, flowing through to next week with the non-farm payroll. So as you say, it's encouraging to see the market up, and we're seeing some black and some green on the boards, but it's not necessarily as exciting a news. In terms of that Chinese data, you would expect to get some more buying for materials that we're not seeing.
Yeah, on the flip side, even though that's sort of a disappointing, say, segment of the market there today, it's actually great to see some buying coming in back into the major banks.
Indeed. I mean, that's where you sort of earn your crust in terms of advice. It's sort of working out when the banks are sort of fair value in terms of having a great run up over the last 6 months. We're waiting to sort of have a bit of a view as to whether or not we want to buy in now, or whether we'll see some further selling as June commences. I mean, the challenge is that the banks make up such a staple of so many portfolios. For a lot of people that bought in years and years ago, they're sort of not so worried about when it trims down a touch. But as you say, it's encouraging to see that buying for so many portfolios. For new money, I think there's potentially going to be some even softer prices over the next month or so.
Okay, let's move into some of the, the session's top and bottom movers, some of the movers and shakers, I guess. APN Outdoor, APO, of course, is the ticker code there, slightly in positive territory today. It's provided a revenue update, is that right, for April for the sector? So just talk us through, I guess, what we've seen and those moves today.
Yes, as you say, it's a really intriguing announcement. So they're sharing it on behalf of the whole broader industry, which is the agency that sort of collects all the data in terms of outdoor advertising. They're updating the market that there was a slight miscalculation. So I don't know if this was a zero in the wrong place or a decimal point in the wrong string of numbers, but one of their sort of member agencies contacted them and they've had to regrade everything. So they were talking about sort of 10% growth, 10.8% year on year. They've now revised that down to around 6%. So it isn't a sort of a sector of advertising that is growing, but not as much, and that was just due to a pure human error miscalculation. So at least the market's now updated. I don't know if it would have had any implications for sort of Rod Sims and the ACCC, but APO Outdoor sort of advertising that in terms of the growth of outdoor advertising, it is strong, but it's not as strong as was first advertised in late May.
Now, also watching Henderson, because Janus Capital and Henderson Group today announcing the completion of this all-stock merger of equals. Just tell us a little bit more about this one and the subsequent reaction on the market.
Well, as you say, it's something we flagged and we were talking about as being one of our buys. It's created a lot of confusion for clients and it confuses us slightly. It's going through sort of 3 different installments of changing its ticker code. So Henderson is HGG. It's now Janus Henderson Group. And in terms of the ASX, it's now HGGDA. And that's while there's this consolidation exercise. Next week, it will revert to HGG. And then once the consolidation has taken place, it will now be listed from sort of mid-June onwards as JHG. So as you say, a merger of equals, the strength of Janus in the States allied with Henderson from the UK, a very powerful assets under management, very powerful distribution channel, so a stock that we have optimism for. The challenge for everyone at home is working out how to buy it and what the ticker code is. So it's currently HGGDA, and that's playing around with things like your sort of Morningstar and all sorts of online trading platforms that clients might use and sort of get their research from when they call us. It's causing haywire in terms of calculating things like your PE and what the current trading price is. So that's what's happening with Janus Henderson. Hopefully a very exciting proposition in funds management.
Yep, let's hope so. And yeah, glad you clarified that, because I too was trying to pull it up on my screen, trying to find it. HGGDA just popped up there. So off about 0.5%, $41.25 at the moment. One that's doing really well though today is Afterpay Holdings. AFY, the ticker code, it's up about 3.5% there at the moment. Tell us a little bit about this. I think it's at its highest level in over 3 months or so.
Yes, as you say, a very intriguing stock. It's come up recently twice when we've been discussing the market. I mean, once on Your Money, Your Call, so it is attracting sort of a lot of attention in this sort of disruption in terms of technology and payments. And likewise, they recently were flagging to the market with this Trade Me Group link up. So they've got a raft of announcements and bits of news to sort of share with the market. In terms of what it does as a business, a lot of people will have seen it because they're tying up with a lot of small and medium enterprises, particularly in retailing. It allows people, instead of sort of spending $200 up front on a new item like some new clothes, you could pay, for example, in fortnightly installments, $50 each time. So that's its sort of proposition. It's working with some blue chips as well, like your Officeworks. It's working with a number of other, like I say, sort of lots of small and medium enterprises. So you might see it in shopping centres, this sort of advert for Afterpay. So it's a stock that we're not getting clients into yet because we want to see that it can actually run its business model successfully over a period of time. But it really is attracting a lot of attention at the moment. They're very positive in terms of their sales. It's close to an all-time high, as you say, and this is a stock that's on the march in terms of its own vision of getting a lot of market penetration. Now, will it be profitable? That remains to be seen. It is sort of not necessarily a startup, but it's very much embryonic in its sort of life on the ASX. But it's a stock that's certainly worth bringing to the nation's attention, particularly with that TME link up, a stock that we do like in terms of being an online marketplace over in New Zealand.
All right, excellent. Well, as you say, having a good day there today, $2.64 for AFY. Now, Lawrence, if you don't mind holding on there, we're actually going to just address a couple of viewer emails that have come in. And